Hello guys, welcome to the Nexoel Trading Hub YouTube channel, and happy new year to you all, and also happy new months. So we are resuming the weekly forex forecast for the year 2025. So I believe that you all will find value in our weekly forecast, and you'll be able to utilize that in your trade analysis and trade executions in the year 2025, and you'll be able to sustain profitability. So this is DXY, and we're going to start off from the monthly time frame. So what we can see from the monthly time frame is that here is our sell side liquidity. We have our buy side liquidity. You know, last year I told us to expect more bullish move into this monthly fair value gap because we saw price failing to take out the sell side liquidity, and then we started having this bullish momentum. So we are still expecting more bullish push of price in the dollar index because the dollar index is now heavily bullish. So we can still be expecting more bullish move because this is the next draw on liquidity, this buy side liquidity. So I'm not saying that this buy side liquidity is going to be taken immediately. You know, this is the monthly time frame, but I want us to start this analysis from the monthly time frame, and then we're going to drop to the lower time frame. So what we can see is that price mitigated the monthly fair value gap, and we can see how this bullish candle close above the mean threshold of the fair value gap. So we're still having further bullish momentum to the upside. So price have filled up the fair value gap completely because we can see that this bullish candle mitigated the wick of this candle. So what we can see now is price left this fair value gap here. So I'm expecting to see a dip of price to the downside to fill up this fair value gap, and we could see price dip lower below the mean threshold to mitigate the 25% of this candle wick, and then we have further bullish push of price to the upside. So let's flip to actually look at the 25% of this candle wick, because candle wicks are also sponsorship zones. So we can see that the 25% of this candle wick is actually this price level, 107.516, or we could see it dip more lower into the 50% of this candle wick, and then we have further bullish continuation to the upside. So let's check the weekly time frame. So here in the weekly time frame, we can see that in confluence to the 25% of the monthly candle wick we identify from the monthly time frame, we can see here we have this weekly fair value gap. So we could see that dip of price to this weekly fair value gap, and then we have the bullish continuation to the upside, because what you can see is that price is mitigating this order block that was violated to the downside. So you can see you have this order block, which we can consider as a breakout block in confluence to this fair value gap. You can clearly see how price closed below the mean threshold of the volume of this breakout block in confluence to this fair value gap. So we could expect a dip of price to the downside to mitigate this weekly fair value gap, or we could see price mitigate this fair value gap we identify from the monthly time frame, and then we have the bullish continuation. But I'm looking forward to see price give us more discount price to the downside to mitigate this weekly fair value gap, and we have the bullish continuation to the upside. So let's check the daily time frame. So what we can see from the daily time frame, we have this fair value gap in the daily time frame. So from the daily time frame, you should look forward to see price delivery within this fair value gap. If price here is respecting the mean threshold of this fair value gap, then we could just see the bullish continuation to the upside, or we could see price dip more lower to take out this sell side liquidity into the weekly fair value gap, and then we have the bullish continuation to the upside. So this is my view on the dollar index. So we're going to check out the 4-hour time frame to see if we can have more confluences to that. Here in the 4-hour time frame, we can clearly see the daily fair value gap in the 4-hour time frame, and you know, this is the monthly fair value gap. And here in the monthly fair value gap zone, we have this consolidation. But since we have, this is the deeper pullback, and then price further gave bullish continuation, and we have the break of structure here. So we could see price take this sell side liquidity into the weekly fair value gap, and then we have the bullish continuation. So you can have your eye at this zone, this daily fair value gap and the weekly fair value gap zone before we frame the bullish continuation to the upside. So guys, this is EURUSD and this is the monthly time frame. So we can clearly see also in EURUSD, price failed to take out this buy side liquidity, just where we identify in the dollar index how price failed to take out the sell side liquidity. Now we have the bearish move of price to the downside into the monthly fair value gap, and we can see how price is respecting the mean threshold. Where is our next drawn liquidity based on the monthly time frame? Here we can see the monthly fair value gap, but I'm not saying that we're going to see the bullish move to the upside into this monthly fair value gap. Don't forget, this is the monthly time frame. That is going to take a long time. So what we can identify is that we have this candle wick here. So within a candle wick, you can find sponsorship zone in a lower time frame. So we could see the pullback of price into the 50% of this candle wick, or we could see price return just to the 25%, but I'll be looking forward in this case to the 50% of this candle wick, and then we have the bearish continuation of price to the downside, since we are still expecting higher prices in the dollar index. So let's check the weekly time frame so that we can identify the ideal sponsorship zone to consider. So here in the weekly time frame, we can see that within the monthly fair value gap, we have also this weekly fair value gap, and in confluence, this order block that sponsored the bearish movement of price to the downside, but we can see the impulsive move that broke through this order block, and we can see how price returned to mitigate that, and we can see the rejection in confluence to the monthly fair value gap mean threshold. And what we can clearly identify is this is the monthly fair value gap zone we identify from the monthly time frame, and we can see how in the monthly fair value gap and slightly below the monthly fair value gap, we have this weekly fair value gap, and here's the return of price to mitigate that weekly fair value gap. Price mitigated the weekly fair value gap and then dropped to the downside. Now we're seeing this rejection at the mean threshold of the monthly fair value gap. We can see price left this fair value gap here, return mitigated it. So for us to frame a bearish continuation or to see for the rise of price to the upside before we frame the bearish continuation, we can clearly identify a zone aside from the monthly fair value gap we have above here. So let's check the daily time frame so that we can clearly now connect the time frames and then identify the possibility of higher price and the sponsorship zone we can consider selling off from. So let's check the daily time frame. So here is the daily time frame. What we can see in the daily time frame is we have the fall of price, we have this pullback, price drop to the downside, took out this buy side liquidity and drop. We have a break of structure. So here is the pullback before the break of this structure to the downside. But here we can see price delivered to the downside into the mean threshold of the monthly fair value gap, mitigated it, and we can see we're having this bullish candle to the upside and price left this fair value gap. So for the EURUSD, we should consider to see that price may mitigate this fair value gap and continue bearish to the downside, or we could see that price would take out the buy side liquidity and then we have the bearish continuation to the downside. So you have to wait to see the reaction of price within this daily candle on Monday. Then you can consider if price is going to sell off from this fair value gap or price is going to dip more higher to take out this buy side liquidity before we have the bearish continuation to the downside. So let's check the 4-hour time frame. So here in the 4-hour time frame, we can clearly see how price took out this buy side liquidity, dropped to the downside. Now we have the break of structure. So this is a pullback created before the break of this structure. So we could see further push of price to mitigate this order flow, and then we have the bearish continuation to the downside, or we look forward to see the reaction of price based on the daily fair value gap we identify from the daily time frame, and then we can consider selling from the fair value gap. But I am thinking that price is going to fill up this fair value gap and trade higher to take out the buy side liquidity before we have the bearish continuation to the downside. So I am just giving you guys a clear perspective to what I'm expecting to see in the markets when the market opens. So I'm not going to drop into far lower time frame to further break down price delivery. That is going to be for a daily perspective, expecting to see what is playing out based on the weekly perspective in view. So guys, let's check out the GBP USD pair. So guys, this is GBP USD and this is the monthly time frame also. So we can see how price mitigated this order block, and then we have the bearish fall to the downside. So we can also see that the GBP USD is also in a bearish market condition. So what we can see clearly is that price is still bearish to the downside. Price mitigated this order block, or we could just consider this as an order flow, but this is the up close candle before the bearish move to the downside. Price filled up this fair value gap, further push into the order block, and we have the fall of price to the downside. So we can see this is our next drawn liquidity, the sell side liquidity. And what we can clearly see is that price is mitigating the mean threshold of this candle wick here. So we can see that price mitigated the 50% of that candle wick and then closed above the 50%. So where is the next drawn liquidity if we're going to see more bullish rise of price to the upside? It is this monthly fair value gap. But just the way I've also said, in the Euro USD, we shouldn't expect to see that price would return to this monthly fair value gap before we have the continuation to the downside, because this is a monthly time frame. This is going to take time. So we must also understand that within a week are also sponsorship zone, could be a sponsorship zone in a lower time frame. So we could look forward to the 50% of this candle wick in confluence to a sponsorship zone in a lower time frame, and then frame the bearish continuation to the downside. Since we can see that price respected the mean threshold of this rejection block, and we can see how price closed above it. So let's drop to the weekly time frame. So here in the weekly time frame, what we can clearly see is that within the monthly fair value gap we identify in the monthly time frame, we can see also slightly below it we have the weekly fair value gap, and in confluence we have this order block that was violated to the downside. Now we can see how price returned to the mean threshold, mitigated that, and gave us the bearish continuation. Price created this fair value gap, this bearish candle mitigated that fair value gap, and further fell to the downside. So we can see price took out this inducement, broke this swing low. So we are seeing a shift in market structure, and price gave us this pullback and then further bearish move. So for us to identify the next zone, we can consider taking our bearish continuation to the downside. After we see the pullback to the upside, then we have to check the daily time frame, since the weekly time frame is not clearly giving us a zone. So in the daily time frame, we could possibly identify that zone. So here in the daily time frame, we can see we have this fair value gap. So you can see in the daily time frame, the weekly fair value gap zone and the monthly fair value gap zone. You can see how price return took out this buy side liquidity and continued bearish to the downside, and we have this break of structure. Here we have the pullback before the break of the swing low point. Price created this fair value gap. So we could see price respect this fair value gap and take out the sell side liquidity, or we could see price for the push to the upside and take out this buy side liquidity to mitigate this up close candle before this bearish movement to the downside that sponsored the break of the structure. Then we can see the continuation of price to the downside. So this is what to expect in the GBP USD. So let's check the 4-hour time frame if we can also see a clear perspective to that. So here in the 4-hour time frame, we can see the daily fair value gap. We can clearly see price took out this buy side liquidity, created this new lower high, price dropped to the downside, took out this low. Here is the pullback before the break of structure. So we could see price dip more higher to take out this buy side liquidity, and then we have the bearish continuation to the downside. This is gold, and this is the monthly time frame. What we can clearly see in gold is gold have been extremely bullish to the upside throughout last year. We can see this bullish momentum to the upside. Now, what we can clearly see at the current price delivery is that price dropped to the downside, mitigated the mean threshold of this fair value gap, and closed above it. But we can see that the next month's price failed to take out the high, and we are seeing that the volume closed below this bearish candle. And here we have this candle also giving us a perspective to expect downward movement of price to the downside. So we could see price dip back into this monthly fair value gap before we can further print out any form of a bullish rise in the gold pair. Gold is not really clear, that's the truth. So let's check the weekly time frame. So what we can see in the weekly time frame is we have the push of price to the downside into the monthly fair value gap, and price mitigated this weekly fair value gap, respected the mean threshold of that fair value gap, and price pushed to the upside back into this bearish fair value gap, mitigated it, and we can see how price have been giving us a consolidation within this price zone. Now we have price mitigated the fair value gap, drop back into the fair value gap in the monthly time frame, return back into the monthly fair value gap, and we can see the candles formation here. So we do not really have a clear perspective from the monthly and also from the weekly, but we know that the established directional bias is a bullish directional bias. So we can now check the daily time frame to possibly expect a move to the upside or to the downside. So here in the daily time frame, we can see this bullish push of price to the upside. We had this pullback, price return, took out this, further went to the downside, took out this low. So we have a market structure shift and into the monthly fair value gap zone. So you can see that return into that weekly fair value gap zone, and we had this drop of price failed to continue further to the downside, and we had return that swept this high points. So for gold is not really giving us a clear direction. You can see the price range here, but we know that price took out this buy side liquidity and dropped to the downside, took out this low with a candle close. This is not still giving us a change in market character, because this is still within the swing high and the swing low here. So we could just see price push to the downside and take out this low and further into this weekly fair value gap, or we could see price react at this order block and continue bullish. Now we can see price reacted at this daily fair value gap, and we're seeing price giving us a downward reaction. So we could see further push to the downside, or we could see price react at this order block and continue bullish. But since the DXY is giving us a bullish perspective, then we could expect the possibility of price continuing bearish in gold also. So let's check the 4-hour time frame. So this is the 4-hour time frame. So we can clearly see that consolidation within this price range, this price zone here. So we can see also that return that we identified from the daily time frame. So we could see that push to the downside, or price may respect this sell move before this bullish move, and we have price push to the upside. So gold is not really clear. So we have to wait to see the delivery of price in the first week of January before we can really begin to consider some established directional buyers for a pair like the gold pair. So guys, let's check out the AUDUSD pair. This is AUDUSD, and this is the monthly time frame. We can clearly see that AUDUSD has been in a bearish market condition. So we can also see that our next drawn liquidity is the sell side liquidity. So we can clearly see that when we check the price reaction at the week of this monthly candle, we could possibly see that price have traded below the 50% of that candle week, which is supposed to serve as the rejection block. And we can clearly see that price closed below the 50% of this candle week. So we could see the return of price into the 50% of this candle week, and then we have the bearish continuation to take out the sell side liquidity, because we can clearly identify the monthly fair value gap. So we want to see the push of price into the monthly fair value gap, and we have the bearish continuation to the downside. So price would dip higher either to the 25% or 50% of this candle week in confluence to the monthly fair value gap, and we have the bearish continuation to the downside, or price may seek the liquidity before returning, and we have the bearish continuation to the downside. So since this is the monthly time frame, let's drop to the weekly time frame to have more better perspective to that. So we can see that within the monthly fair value gap, we have the weekly fair value gap. So we could see price reaction at the weekly fair value gap, which is also within the monthly fair value gap. And then we have the bearish continuation, or price may sweep the sell side first, seek out the sell side to further return to fill up the weekly fair value gap, mitigate it, and then we have the bearish continuation to the downside. So let's check the daily time frame. So here in the daily time frame, all we can clearly see is that we have the downtrend how price have been falling to the downside. We have this impulse movement to the downside. Price gave this pullback, so we can see this rough price delivery here. So we could possibly see this price delivery. Price may dip to the downside, return into the weekly fair value gap, and then we have the bearish continuation to the downside. Or we could see price continue bullish into the weekly fair value gap, which in confluence we have the monthly fair value gap, and then we have the bearish continuation. So let's check the 4-hour time frame. So this is the 4-hour time frame. We can see clearly also in the 4-hour time frame we're having a very rough price delivery, but what we can see is price drop to the downside. We have this impulse, price pullback, we have this swept. This is the buy side liquidity, and we can also see that within the weekly fair value gap and the monthly we have this order block in the 4-hour time frame. So we could see this reaction, and then price falls to the downside, or price will seek the sell side liquidity, return back to take out the buy side, and then we have the bearish continuation to the downside. So this is what I'm expecting to see in the AUDUSD pair. So let's check out the NZDUSD pair. So guys, this is NZDUSD and this is the monthly time frame. So what we can clearly see is we have the next drawn liquidity, which is the sell side liquidity. We can clearly see here. We can see that NZDUSD is also in a bearish market condition, just the way we identify with EURUSD, GBPUSD, AUDUSD. And now we can see the drawn liquidity is the sell side liquidity, because we can see this bearish momentum to the downside. And here we have the monthly fair value gap. So we want to see the dip of price into the monthly fair value gap, and then we have the bearish continuation to take out the sell side liquidity. So let's check the weekly time frame. So here in the weekly time frame in NZDUSD, we can also see within the weekly time frame we have also the weekly fair value gap within the monthly fair value gap. So we can identify the possibility of price returning into the weekly fair value gap that is in confluence with the monthly fair value gap, and then we have the bearish continuation to the downside. We can see price reacting at this order block, this down close candle before this bullish move to the upside, and now we are seeing the return of price. We identify that price is bearish, so we can see price here took out this buy side liquidity. Now we are seeing price seeking the sell side liquidity. So we could see more higher prices into the weekly fair value gap, and then price falls to the downside. But when we look closely, we can see that this bearish candle mitigated this weekly fair value gap, mitigated the low of the fair value gap. So we could see just the drop of price, but I'm expecting to see that possibility of price still returning to the upside before we have the bearish continuation. So let's check the daily time frame. So here in the daily time frame, what we can clearly see is price gave us this fall of price to the downside. We have this bearish momentum movement. We can see price swept this buy side liquidity, fell to the downside. Now we can see we have a break of structure here. Price gave us this pullback. So we have this buy side liquidity resting here, and above the buy side liquidity we can see we have this fair value gap in the weekly time frame and the monthly fair value gap zone. So we could see price dip higher. Here we have this fair value gap, so we could see price dip higher to the upside, and then we have the fall of price to the downside. Price will mitigate this fair value gap, but since we can see that price fell to the downside and this is the buy side liquidity, so I'm expecting to see higher price into the fair value gap, and then we have the bearish continuation to the downside. So let's check the 4-hour time frame. So here in the 4-hour time frame we can clearly see also how price is just consolidating here, or how price consolidated here, fell and then took out this low. We have the fall to the downside, this momentum movement. So if price continues bullish to the upside, which I don't think price is going to respect this daily fair value gap we identify, so we could see this bullish into the weekly fair value gap, which is in confluence with the monthly fair value gap, and we can see we have this up close candle to the upside before the bearish momentum to the downside. So here we have buy side liquidity, so we could see this rise in price to the upside and then the bearish continuation to take out the sell side liquidity. So this is my perspective for the NZDUSD, but let's watch how price delivers on Monday, and then we can begin to frame with the expectations we have for the weekly forecast.